So after setting up the generic vendors, what's next? Well, I'm going to go ahead and pull financials. I'm just going to pull them. These are just the most recent. We're still in January. Today is the last day of January when I'm recording. And I'm going to just go ahead and pull up the financials as they stand. I'm going to go ahead and select yes for zero because there's no accounting. There's zero accounting on these books. And you can even see it is showing the accounts that I made inactive earlier as part of the generic setup process. But you can also see that now my own accounts for the Chase checking, Chase savings, and Amex are now reflected here, which is what I wanted, as well as my capital contribution and owner distribution accounts that I set up in owner's equity. Okay. So that is what I wanted to see. And I do want to confirm that it's all zero and we're starting from scratch, right? So what's next here? Well, typically you're going to ask yourself one or two things. You're going to find out, well, one, if you're an existing business with financials, right? That means we're doing a conversion as opposed to a new business setup, okay? So there's two different processes. So one is existing business with financials. And the next one is new business, no financials, setting up the business for the first time. We've never had books and we're new. Okay, so those are the two options that you have right now. And so if you are a new company setting up, we're going to go over that. And if you are an existing business with financials, go ahead and pull your trial balance, okay? And then you're going to pull the sub-ledger reports as well, meaning when you pull up your financials, which is your balance sheet and income statement, or P&L, profit and loss, those are interchangeable words, okay? You can use, that means the same thing. Your financials are made up of those two pieces of information, balance sheet, income statement. Income statement is also P&L, profit and loss, okay? So what you need to know, and I'm going to go ahead and pull up, I'm going to move that out. I'm going to pull up my income statement so you can see what that looks like. And, well, I'm going to just leave it in January because we just started in the year. So I'm going to leave that alone. And I'm going to just open this up. You can see that we are dealing with a brand new section on either report because like I said, I'm just setting these up all up for the first time on screen. And these are your financials. This is the balance sheet, okay, what you want to know. And this is the income statement, P&L, profit and loss. The balance sheet is a cumulative running total, meaning the numbers on here don't go away. They don't zero out. They are continuous for the life of your business, okay? So a lot of times I care about seeing a balance sheet before I care about the income statement because if we're looking at the balance sheet anyway on any other month of the year, I can also see profitability. Okay, so usually I care about the balance sheet more, and it also tells me how the business is kind of done and over a long period of time, as opposed to an income statement P&L. This zeroes out every whatever your fiscal year ending is, or standard calendar, or if you're on a standard calendar year, then it's going to go from January. You're going to see it be zero, and then it's going to ramp up, however fast or slow that is for your business, and you're going to see it go full circle and ramp up as you earn money and as you spend money. You're going to see it ramp up and kind of do its thing. But at the end of the year, this is what you're going to pay taxes on. Okay, if you're the business owner and you're a sole prop, you're going to file this on a Schedule C. If you are a corporation or you have business partners and have a partnership, then you're going to file. It's going to file its tax return, but it's going to flow through to its business partners and still get claimed on your personal tax return. Right? That's how the profits of a business get claimed. If you don't know. We're going to kind of walk through the whole process of what's next in terms of setting up a brand new business. Okay, like I said, if you are an existing business, pull out your trial balance, your accounts receivable, an inventory report if applicable, vendor deposits. Pull out any subledger reports that are going to matter to your particular business. Okay, so AR, AP, client deposits, vendor deposits, and inventory. Okay, those are the ones that are you're going to want to pull the detail on, because everything else we can kind of match up. But those you want the details on. And if there's anything at all that is inaccurate or shouldn't be taken over, you're going to want to clean that accounting up in the old software. It's not a matter of just deleting things, like deleting an invoice so you now won't have the receivable. There's things tied into things, so you never want to just arbitrarily delete anything. And you don't want anybody, even those managing your books, you don't want anybody to have that type of permissions to just delete anything. Okay, you want an audit trail even for mistakes and everything else. Okay, there's a way to kind of treat and process everything. And doing things properly and accurately the first time kind of obviously in turn allows you to have an accurate reporting, an accurate way to look at your business, an accurate way to see the things that aren't working for you in real time, as opposed to kind of just seeing how you did for the year and calling it a day. If you are not looking at these financials to learn how you're doing business and learn what's working and not working, then you might as well just go back to balancing a checkbook or running your business through whatever method you're doing now, if any. Okay, because any system, including Studio, is going to only be as good as the information that you provide to it. Okay, I see, a lot of times people think that it's going to be this magic fix-all. And it is. It's a very powerful tool to manage your business and to grow your profits, but not if you aren't maintaining it, and not if you're not knowing how to read or interpret reports or know what to do with them. Okay, so that being said, we're going to dive right into what's next here in our business.